It is March 16th, Tuesday, and it's 8 p.m. Eastern Daylight Time. This is just a wrap-up of futures trading today. We had an interesting day. We initially went up dramatically with the NASDAQ, and there was a lot of divergence. The Dow and the Russell 2000 plummeted and were low for most of the trading day. So with the NASDAQ, we really took off like a rocket, and I was happy because I was all in NASDAQ. Well, not all in. I had three contracts long NASDAQ and 2 contracts long the Dow. And I bought it. I bought and sold some shares. You can see I bought one here, then sold for a little scalp trade, and then I sold another one, but then I bought it back actually at a higher price, and then sold it at an even higher price. Now, what was interesting is that we went a little parabolic momentarily, and so we went a little parabolic here, and so here's the 200-day moving average way down here, and this is a 15-minute chart. 50-day moving average is here, and then the 20-day moving average is here. So we were above all of those averages, and we had a breakout. So this was the breakout candle. Broke out, and as you can see, I sold. And the reason I made this sell here was I had drawn this line, this blue line, a while back, way back. You gotta have to scan. Go back. I don't even know if I'll be able to go back far enough to show where I drew that line. And let's see, maybe I ought to see it again. There it is. Okay, so I drew that line way back, and I thought that would be a significant line. I thought it was a significant line here. You know, you can see a lot of touches and bounces off that line, and then it acted as resistance. And so when I saw that line again, I drew that line, and it'll stay as long as I don't remove it. And so I hadn't seen that line in a while because the NASDAQ had really been pulling back. But that line appeared again, and so when we touched that line during this candle, you can see I sold another contract because I figured this line would be, it was still significant, and we would probably not see the end of this line. It's not just going to keep going up, it's going to come back down. And so I sold here. I still had, and then we went higher, and I bought the share back here, but then I sold. That was again a quick scalp trade. Sold it here, and then we started getting some topping tails, and I thought we were probably going to get a pullback. You know, the sometimes, you know, when the NASDAQ is surging higher like this, it'll pull up the Dow, but that didn't happen. And my concern was that the Dow was going to pull down the NASDAQ. You know, there was just going to be negative sentiment that would spread throughout the equities markets. And so I just decided to sell all of my contracts. I sold completely out of the NASDAQ. Now, shortly after I did that, so we did get some pullback. And what I decided to do, because I don't like being completely out, and I had by then also sold out of my Dow contracts. So I was actually flat across the board, and I'm rarely flat. So, you know, I was very anxious to get back in. And as soon as we got a little pullback, I got in the S&P 500 rather than back in the Dow. I mean, in the NASDAQ or the Dow. So the S&P 500, I purchased six contracts. And that's what I'm currently holding now. And the reason I did that was because when the NASDAQ pulls back, it can be pretty dramatic. And I wanted to lock in those gains and not just give them back with a pullback. We did get a pretty substantial pullback, as you can see. And again, we went above this blue line that I had drawn weeks ago. And then we came back through it, went back up and touched it a couple of times, and then down. And then we started going through the moving averages, and we were the 20-day crossed over the 50-day moving average, and we've been pretty much hugging that 20-day moving average line, and I think we'll probably end up going back down at least to the of course, I don't have a crystal ball, but I'm thinking we'll probably go back down to the 200-day moving average, possibly sometime tonight. Well, that's what happened in the NASDAQ. The Dow was just having a bad day all day. I didn't really have any choice about when I was going to get out. I knew there weren't going to be many opportunities to get out while the Dow was up because the Dow just stayed down most of the day. And so I sold my shares. We were just kind of we were just kind of sitting in this range. And I just didn't see the potential for the Dow to turn around and rocket higher. That potential is always there, but just didn't seem like it was going to do it today. So I got out, and we trended a little bit lower from where I got out and just kind of stayed flatline. And that's the thing, you know. So I sold my Dow shares because I thought the Dow might keep pulling the NASDAQ down. The Dow kind of flattened out, but the NASDAQ went significantly lower than its highs. It ended up for the day, but it was only up about $10. It had been up a lot more than that, and so that's why I felt more comfortable being in the S&P 500, which to me is kind of a neutral trade. It doesn't dramatically go up or go down. I mean, it will, you know, if you got the NASDAQ and the Dow flying, the S&P will tend to fly with it. But usually not quite as dramatic as the other indices. And when the Dow or the NASDAQ tank, especially individually, if there's a divergence and you get the Dow tanking and the NASDAQ rising, the S&P will pretty much be flat. It's almost like it's more influenced by the NASDAQ than the Dow, but it's S&P is kind of like a combination of both, because you got everything in the S&P 500. So all I hold now are six contracts in the S&P 500. So 6 contracts, and it's off its lows, off its highs, kind of just trading in the middle there. I did a little scalp trade in the Russell 2000. The Russell 2000 really took a hit. I did a little scalp trade in and out, and I'm glad I didn't hold that long, because that just continued to trend lower. All right, so there you have it. In terms of my account, you see I'm at 43,000. Keep in mind that my account's recent all-time high was 44.5, so I'm not far from those highs. 1,500 from the highs, and I've been as low as 28,000. So I'm very happy with 43,000, and you see my margin requirement is pretty high tonight. It's 8,000. That was the result of a technical glitch, but that amount shows you what the margin requirement after hours can get to. So what happened, there was a order routing problem with CQG, which routes my orders. So my brokerage firm sent me an email saying, because of this problem, even though it's not affecting my account, until it's completely resolved, they have required 100% margin for accounts right now. So until CQG resolves this trading glitch, this routing glitch rather, the margins are at 100%. So that's why you really have to watch how much margin's could potentially cost you in any situation, particularly when you hold contracts overnight. The margin requirements go up after hours, and if they're at 100%, they're significantly higher than they are during the routine trading hours. So just holding 6 S&P 500 contracts after hours with a 100% margin requirement is $8,000. Just something to keep in mind when you're trading futures contracts. All right. We'll do it again on Wednesday. I wish you all good trading after hours, pre-market, and during the market. I'll see you in a day.